Let's take this simple case study to understand whether we should continue the production or shut down. We are given some 3 or 4 information. Fixed expenses at 50% activity 15,000. Fixed expenses when the factory is shut down 10,000. Additional expenses in closing down the factory 1,000. Production at 50% activity is equal to 5,000 units, and each unit will give contribution 1 per unit. So if activity is continued, then there will be fixed expenses and it's going to be 15,000. If the activity is not continued, I mean if the factory is going to be shut down, the fixed expenses are these two, which is 10,000 plus 1,000, 11,000. So by continuing the activity, you are going to spend 15. By not continuing, you are going to spend 11. It means by continuing the activity, you are going to spend additional 4,000 rupees. Now, what is the benefit you are going to get by spending this additional 4,000 rupees? That's what we have to see. And for that, you have a contribution and number of units. Number of units are 5,000. Contribution is 1. 5,000 into 1, you are going to get a contribution of 5,000. Whereas your additional fixed expenses are 4,000, it means you still get a positive contribution. So let me capture them over here. Item A. Now, if the plant is shut down, what is going to be your expense? So I'll write if the plant is shut down, then fixed expenses are, you have this 10,000 plus you also have 1,000, so it is 11,000. Okay. Now if you continue the plant, if you are going to work at 50%, if it is working at 50%, then fixed expenses are, this is nothing but 15,000 directly given in the question. Okay, so the additional fixed expenses, you can say additional fixed expenses you are going to incur by working at 50% capacity is B minus A. It's going to be 15,000 minus 11,000, you get 4,000. Now what is the benefit you are going to get by incurring this additional 4,000? That's by working. You are going to get a contribution, right? You are going to get a contribution on 5,000 units at 1 per unit. So the contribution is going to be 5,000 multiplied by 1. It means you still get some contribution towards the operations. Okay, so 5,000 minus 4,000, you get a net benefit. I say net benefit you are going to get if you are going to work, if you are going to continue your operations. Okay, but instead if you are going to close down, what will happen? Your contribution will become 0 and you have to spend this 11,000. So no contribution and you have to spend this 11,000. So there is no net benefit, you are going to lose money. I can also analyze the same scenario in a different context where I can find out what is the overall loss position if you are going to produce or if you are going to shut down. It's going to be a loss because the contribution is very minimal, right? So item A, what will be the contribution if you are going to produce? In that case, we know it's 5,000 into 1. If you're going to shut down, there is no activity, then there is no contribution. What will be your fixed cost if you are going to produce and if you are going to shut down? If you are going to produce, your fixed cost, we know it's 15,000. If you are going to shut down, your fixed cost is 11,000. Now let's find out what is the overall loss position, because contribution is lesser than the fixed cost. So loss, in this case, it's 5,000 minus 15,000, the loss is 10,000. Whereas if you're going to shut down, your loss is going to be 11,000. So it was this difference of 1,000 you are going to lose, or I would say if you produce, you get a net benefit of 1,000. If you shut down, then you are going to lose this net benefit of 1,000. Okay, so what is the advice? It is advisable to continue the production instead of closing down.